we're just talking about, it was a heat wave in Austin, but it kind of feels like a crypto winter potentially right now. So joining us now to discuss the crypto markets is Sean Farrell. He's head of digital asset strategy at crypto research firm Fundstrat Global Advisors. Good morning, Sean.
Morning, guys. Thanks for having me.
Thank you for being here. So, of course, the question on everyone's mind here is, what caused this? What was the trigger? Was it this rumor that the Fed might potentially raise as high as 75 basis points, or was it this basically this shutdown, if you will, or Celsius not allowing their customers to withdraw? Where did this cycle begin, if you will? Like, where the chicken and the egg?
Yeah, no, I mean, that's a good question. I think Emily raised, an interesting point in terms of the profile of the crypto investor. Whereas in previous cycles, the Venn diagram of, crypto and traditional, financial asset investors, pretty much looked like two circles. Over the past 1-2 years, we've seen a convergence of those two cohorts. And as a result, we have to take the good with the bad. And unfortunately, we are beholden to, macro variables now. And essentially what we're seeing, I think everybody is aware of this, but at this point is, we're coming off of about a decade of, monetary stimulus. The money supply has grown rapidly. And for the first time, market participants are getting the punch bowl taken away from them. And, now investors broadly are just, there's price discovery going on because now investors are kind of concerned over the potential for a stagflationary environment in which we, continue to raise rates into a recession. So I think that's what we're seeing right now in terms of asset prices. And consequently, what happens is that, just to expand on the second part of your question, consequently, what happens is when asset prices start to come down, a lot of the over-leveraged players start to unwind, and I think that's obviously what we're seeing with Celsius and some on the road.
Yeah, I mean, as far as price discovery goes, at the moment, everyone's Christopher Columbus in that they're already wherever we've been before. People have been here before, and this is kind of a question though about, like, did Celsius kind of precipitate the issue with Celsius? Did it create this sort of massive sell-off that wouldn't have happened had it not been a player in the field here? Or is this sell-off just the result of this overall global market problem?
That's a fair question. I mean, that's a tough counterfactual to produce. Obviously, it's exacerbating the issue right now. Celsius, for context, they've always they've never been revered as the gold standard in the industry. I mean, I think Prime Trust, their custodian, about a year ago exactly, actually broke ties with them due to irresponsible rehypothecation of customer collateral. So they've never had what we would consider a spotless record. So it's not surprising to us that there are active participants in the market that are happy to see them unwind because, quite frankly, I think they were over leveraged in all the wrong areas. So I'm not sure that answers your question. Normally every cycle we challenge the 200-week moving average, which was around 22,000. We did break through that. Now, whether that's due to the macro factors that we had presented, a few minutes ago, or whether that's due to this exacerbation of, sell-off from this Celsius fiasco, that remains to be seen.
It's been a 1-2 punch, right? Because we had UST a few weeks ago, and now we have this. I mean, at some point, the retail investor particularly, but also institutional investors you would expect that they would at least be a little bit shaky going into this market right now, particularly. And if they had to dump things, wouldn't they want to dump the scariest thing on their books? In this case, they don't know when the next shoe is going to drop.
Yeah, but we're seeing that across all asset classes. I think it's very easy to point fingers at crypto specifically. I know conversations I'm having with traditional financial asset managers. They're still generally curious in the industry and want to get involved in long term and actually see this as a buying opportunity. It's just a matter of when and at what price at this point. But if we look across all asset classes, there's not a bid for anything. I mean, mortgage-backed securities last Friday. I mean, they, after that outrageous CPI print, they didn't catch a bid. Nobody talks about the MBS market, but that's obviously not a sign. It shows that investors are worried about further rate and default risk. Yesterday there wasn't I think there were 5 companies in the S&P 500 that finished the day green. Treasuries are getting wiped as well. It's a bloodbath across all macro assets. So it's tough for me to sit here and say this is specific to crypto. And I think most sophisticated investors realize that.
Yeah, so actually you raise a really interesting point about a buying opportunity, because I feel like that cuts both ways, because there's also going to be people who are going to see a lot of like discounts in the stock market as well, right? Like all these big tech stocks that once seems kind of out of reach are now, maybe possible buying opportunities, right? Do you anticipate that could happen, that some people this could actually hurt crypto more because people will be like, hey, like I can actually buy these stocks for a good price, and, this seems like a more stable market in the long run?
Perhaps. I mean, you're not wrong in saying that crypto is further out on the risk curve than, tech stocks normally. But if we look at all of the unprofitable cloud stocks, I think, we referenced the EM Cloud Index to analyze that cohort. I mean, they're down more than Bitcoin year to date. So I think Bitcoin's kind of moved down the risk curve for some investors. The rest of crypto is probably still farther out in the risk curve. So it's a valid point that, liquidity is going to flow to the assets, that are less risky along that risk curve, that are closer, farther down. And so, yeah, if the Fed does reverse policy, if inflation starts to turn over, I think those will probably be the assets that catch a bid first. But, we're talking about right now we're sub-$1 trillion asset class. So the inflows required to send us higher aren't as significant as it might take in equities.
So Bitcoin and Ethereum are very dangerously close to 2 pretty symbolic numbers. One is 20,000 and one is 1,000, right? Like if they fall below these levels, is there a danger of just going into free fall? Because symbolically, like that's going to be a pretty big deal when we go below that.
Yeah, I mean, it does sound silly that these psychological levels are meaningful, but they are, and so that's something we're watching closely. If we look at the derivatives market, it does appear that there are a lot of positions around those levels, so we could see some liquidations as well if prices continue to fall. And I think that's why we saw a lot of investors sit on their hands yesterday, because as I mentioned, price discovery in a slowing growth, rising rate environment is tricky, and something that we're trying to help clients navigate.
So this comes as a surprise to some folks who, I mean, in previous weeks we've talked about, this is probably the bottom, the $30,000 support level, but now we're going down a leg lower for sure. So I wonder, how long do you see this happening? Are we in a crypto winter? Is this the bottom, or could we still go lower yet?
Yeah, I mean, winter, everyone has a different definition of winter. I don't think we're in a winter. We're still seeing projects getting funded. We're still seeing funds raising. Prices certainly don't look good, but we're still just right underneath that $1 trillion market cap level. I don't think I would classify this as a winter. That said, perhaps we found a bottom, perhaps we haven't. Either way, I think we're still going to need to see, inflation start to roll over before we can, be confident in any, run to the upside and relief to the upside.
All right, Sean, we'll end it there. Thank you so much. That was FundStrat Global Advisors Head of Digital Asset Strategy, Sean Farrell.